Have you heard that? Yes, the stock market is going to crash. For real? Welcome once again. This video is for Forex traders. So if you're a Forex trader, good. If you're an index futures trader, no problem. I have one. I'm going to drop it in this video's description. Here I'll be talking about a pre-market opening analysis. What you understand as what? A top-down analysis. Just from its name, a top-down, from up to bottom, from a higher time frame to a lower time frame. This is the European dollar. Right away, I'm going right into the monthly time frame to tell you what my bias is and why I'm looking at this market. Am I going to be short? Am I bearish? Am I bullish? Okay, here's the monthly time frame on the European dollar. If this is the first time, you can just give the video a thumbs up, subscribe if you haven't. Okay, and as we keep going, comment your questions if you want to, and whatever doubts you want me to clarify. Before long in here, I've been calling low, going low one. I want to see sell side delivery, and I outlined a very specific level. Okay, this sell side, everything was outlined, but you can see the main thing I want to let you know on this time frame is there is a thing we call a tail of a candle. If you notice, this candle has the upper portion of a wick, the lower portion of the tail. This candle has a tail. This candle has a long tail. What does it tell you? There was a really fast, energetic retracement in month November. Splitting that tail into two. Here we split it into two and lock it in here. No. So why am I splitting it into two? Okay. First of all, let me do something in here. Let me hide all this annotation and ask you a simple question. What do you see? Notice there's no indicators in there. So what did you see? Do you see resistance? Do you see support? Do you see fair value gap? Do you see BC? Do you see inversion fair value gap? Do you see institutional differential? What do you see? Comment in the section whatever you see. I would love to know that, and I can reply to your comment and tell you my insights, and you can actually learn something by doing that. So just tell me what you see. If it's the same thing as my own, wow. If it's different, no problem. You know, opinions are welcome. Consequence encroachment at what? 1.04532. That point. Do you notice that this month is closing below that? Because literally, this is the 29th of December 2024. The last pre-market opening analysis for 2024 is what I'm doing for Forex. Next week we'll be growing and rolling into 2025. Oh, see you in there, right? New resolutions, whatnot. So the weekly time frame. So I'm bearish. That's what I want to let you know. Note that level. That's control encroachment at 1.1. I just told the level and let the chart load up. It's taking a little bit of time. That's the consequence encroachment of that month, November's tail. That tail I split it into two with a Fibonacci. This level. So now, did you notice that here on the weekly time frame we had the body closing below that right here? That was the week prior to the just concluded week. Here we had the week 16th of November. We had December rather. We had a body closing below it, which tells you what? That is indicative sign of weakness. Okay, so this Fibonacci will not be exceeding probably the daily time frame. That's what I want to do. You're not exceeding that. So here we'll have that. But before I go to the time frame, I want you to zoom in real quickly. Look at something. Well, let me try to make it this way. I don't know. Is this better? I think it should. The midpoint of this candle still the same narrative of the monthly. Do you see the midpoint? Note, this is it. Let me make it a little bit clearer. I annotated this one before this analysis. You can see that 1.01, 1.03856. That's the midpoint of this candle still. Okay, that's the tail consequence encroachment. It means something. Anticipate higher time frame body closure below here. Higher time frame is from the daily and the month and the 4-hour time frame. In this case, okay. In another case, I'll specify whatever higher time frame is. Now to the daily time frame. Here on the daily time frame, this is where the real thing will be, and I'll be fast in here. I don't want to make this video unnecessarily long. This is that midpoint of that Fibonacci I just told you. Okay, now I'll be taking it out because it is essentially this inefficiency. Go to your styles. You can see if you want to make it, you want to split it every time I'm going to do. When you go to your style, you can see middle line. I click the middle line and that dotted white line. You can see it's in close proximity with that Fibonacci I showed you on the monthly time frame. So for that reason, what is this? I'll be taking the Fibonacci off the daily time frame. I don't need it here. Now this inefficiency, watch closely. Price has been going down, and to be honest, this price actually has been very rough. This is a high resistance liquidity run. How many fair value gaps can you see in here? It's very tough to trade this market. So really the real truth is, by this time of the, you want to be enjoying the money you've made all year long. This is not a good price action compared to November. Look at this, October rather. Look at how it's just easy. So this inefficiency is a CB, sell side imbalance, buy side inefficiency. Traditional should show what? It should resist higher price and send price lower. Note very closely. What do you see? The midpoint. Do you see anybody closing above it? No. Now this is a CB. What do I say about it? The caveat. When I say the caveat is like, how would I explain it for someone who doesn't understand? Okay, let me just tell you this. Whatever you throw up must come down, right? What is the caveat to that? If there is a higher proportion force below or supercharging whatever is thrown up, it might come down eventually, but it might really go up to a very reasonable height. If you throw a stone, something propel it, your hand, energy. A rocket goes up, energy, there's something below it pushing it. So the caveat for it not coming down is because of that proportional energy, which is like a push that prevents it from coming down. Ideally it should come down. So the caveat for this, okay, this is the caveat. Are we going to go up in price or we're going to fall lower? The daily premium CB, sell side imbalance, buy side inefficiency, should not get overlapped to the upside. That's the caveat. That's the condition. Exactly. That's the language. The condition for this to what? Send price lower and for us to see a sell side delivery going into 2025. This should not be overlapped to the higher time frame. Like it should not be overlapped to the upside. Like a body, I'll tell you what that means. In fact, higher time frame body should respect its constraint encryption like it's currently doing. What I mean by that, like I said, and I will do right now, I will explain. And overlapping is when you see a body, just a body. Higher time frame, I told you from the 4 hour daily time frame. A daily time frame or a 4 hour time frame, but just closed above this. This is an overlapping. This is what I don't want to see. You don't want to see that. Notice everything was below the midpoint. Remember, this dotted line is the middle line. This dotted white line you've seen is below the midpoint. This is an indicative sign of telling you, hey bro, I am weak. I want to go down. I'll go down. That's what market is telling you here. I'm weak. In as much as body failed to close above this midpoint, man, you okay. Then what are you going to be expecting? You're going to be expecting some sort of Judas, which is, if you notice, look here, you can see this had high, a open, high, low, close. I mean, high, open, close will have the low. So you want the new week from the new day to have a high, which should be like a Judas, a manipulation. So the high should want to run for something like an inefficiency or in liquidity. And right here we'll have this buy side liquidity at 1.044. Why are you tapping? 1.04476. That's a relatively equal high. It's too clean and it's more likely to be swept compared to the British pound. Yes, I'll be doing the British pound. So if you trade the British pound 60, I'll talk about that. So for now, that's the buy side liquidity for a Judas. That's not the draw. That's for a manipulation for the high of the week. I'm not trying to tell you this exactly where it will form, but something to that effect. If we're really bearish, we shouldn't be exceeding, exceeding these inefficiencies. What would I call it now? The covers, like the level, the boundary. Yes, exactly. So this take question of the weekly time frame. We'll be anticipating higher time frame but to close below that. If it does that, you know that then what we'll be going forward. Sell side liquidity is this. This is 1.03330. You see that? That's the best of the best sell side liquidity. When you see BODB, like here you're seeing, it means best of the best. That's what it means. BODB, like best case scenario. You can see this too low, almost the same thing. That's also it. But I really want to see this 1.3330 as a drawn liquidity. But before that, you can see here this low at what? Do I need to annotate all this? Let me just call it out. 1.03837. That's a sell side liquidity at that low. Remember this inefficiency. Now to the 4 hour time frame. What are you going to be looking for? What kind of setup? Okay, this is the kind of setup I'll be looking for at this time of the day, and this kind of setup I'll be looking for to trade. So now what I'll be doing on the 4 hour time frame to tell you the kind of storyline behind the bias I just outlined on this higher time frame, which is the daily and the weekly. Here on the 4 hour time frame, a bit exhausted. I just did a video for the indices. I told you if you're not trading Forex and you want the indices, I'll drop the video link in this current video's description. So you check the description for this video, you see the link for the Nasdaq futures, whatever. If you're trading the indices, I did about that two index pairs there. You can check it out. This is what I told you, which is that weekly tail cost encouragement. Remember, I called the level 1.03856. You can see body is refusing to close below that. You can see they're refusing. So it's just like this press action. Look, this is dirty. Okay, you don't understand. Let me tell you when I say it's dirty. Look at the Nasdaq. Let me explain something. Like I'm just saying it's dirty. Like I can trade that. Well, let me show you something. So here we are. This is the Nasdaq futures. Can you see how clean it is? So you're seeing all this. I'm gonna hide it. I've told you already. If you want to know why I had all this annotation, the video will be in the description. So for the sake of, like, look at it. Look how price move. Easy, fall up, go easy. Like, very easy price action. Now let's go back to the European dollar. So you understand why I say the European dollar is a dirty price action, and you see the difference. Very clear and obvious. So compare it. You can see for yourself. Compare what you saw on the Nasdaq futures. So this is in formal language. It's a high resistance liquidity run. That's what it is, and it's something you don't want to waste time trying to raise all your money. It can really ruin your account. Straight away, I want to see something. This high I told you is too clean. 1.04476. Note the level. When next week comes and I'm telling you, remember I called this high for you 29th of December 2024 before market open on Sunday evening. I in fact did that because it might be like, oh no, this is after the fact. I am doing it in real life. Okay, so level one, sell side liquidity this low. Sure, we have sell side liquidity at this low. 1.03905. Very easy. So once the high gets taken out, you can find whatever setup or model you're looking for to come in here. Someone might be wondering, what's this level? Like, I'm seeing something here. Yes, you can see that. Let's zoom into the left. You can see real close. Look here. Can you see this? If you ever look up this BC, it was overlapped here. So it's gonna be acting as what? An inversion. If you know what an inversion is, if you don't know what an inversion is, it's just like the opposite. If you say something is like this background is like a white, not really pure white, but like, let's just say white. You have a white shade. The opposite is what? Black, right? So an inversion is like the opposite of something. Ideally, that BC should send price higher. This, right? But it has been sending price higher all along. It came in here, sent price higher a little bit and failed. So now since it failed, it should act as an inversion, which means instead of sending price higher, it should now send price lower. That's what an inversion means for who doesn't know. These lows here are too clean. Here I told you at 1.03976. This low also it's 1.03443. It's also liquidity lies in there. That's that for the European dollar. Let's see the 1 hour time frame. On the 1 hour time frame, the same narrative. Remember, this blue is the inefficiency I told you on the daily time frame. Okay, remember I told you the caveat. Yeah, you can go rewind a few seconds, you get it. So these highs are too clean. Price you want to go in here, this sell side, like this is very easy. Let me just draw something like a pattern to explain what I mean. Price you want to do something like a manipulation. It might happen Sunday evening, just boom. It might happen Monday, it might even take Tuesday to do it, but something like this you want to see. Displacement, right? Whatever model you use, you want to see a displacement, probably a little return. Then you want to see trade to the sell side at 905, if I'm not making a mistake, 1.03905. Then you want to see it gravitate even more, right, to this low here. It doesn't have to do it all in this week, okay? It doesn't have to do it all in this week, but eventually this is what I'm expecting to see in price. Okay, just didn't get this stretching, but something like that. That's very poor. Whatever. I'm just looking for something that will just send price lower. Whatever is just set up. And this inefficiency, if price should trade below it, you can use that inefficiency to actually have an entry. So if you go up in here, a displacement lower, this inefficiency could act as what? A resistance. Not that we're doing support and resistance, but if you want to send price lower, if you ever look at a breaker, whatever model you use, you want to engage price, then you want to see something drop to this level, maybe a little bit retracement, and then finally to this level. You don't have to do it all in this week, but this is what you want to see going 205. European dollar, British pound. I'll wrap up the video. British pound, there's not so much of disparity between the European dollar. It's just that most time one is more likely to trade lower. So bearish on the monthly time frame. I want you to see that it's an inefficiency here. It's a little bit blur as loading up, and that's the inefficiency on the monthly time frame I just showed you. We can just rewind a little bit. I hovered over it. That's a monthly discount. I'm looking like a balanced price range, and prior to this video, long ago, since October, probably November, if not October, I said if this gets overlapped, then a swing low at this price level 1.20373 becomes a potential draw on liquidity. And if you want to see that sell side, I think it's just a little bit low. Yeah, that's it, 1.20, that low. But if I zoom in closely, what do you see? Somebody's like, oh, I'm seeing something. This is Well, you can see this. I'm not trying to draw a diagonal support and saying, okay, buy once it touches, buy once it touches, buy. No, I said no. Wake up if you're sleeping. I don't try to do that because that was what I learned before I actually understand price the way I win. My first year, I was learning all kinds of pools. Like, oh my god, very. I was learning the wrong things. But I was learning this diagonal support. But if you're still doing that, well, if you're profitable, no problem. But that's just the wrong thing for me when I was doing it. This, when I see it, I want to cannibalize it. Why? Because the algorithm that delivers efficient, that offers efficient price delivery sees all this low. Stop losses are here. All these long-term position traders, look, since here 2023, they've been long. They are at the height of their profit here. They'll be okay. This is just a decline, and they want to go up. Well, it might go up, but really, that's not what is making it go up. There's something beyond that. But what I expect, what I anticipate, the mindset I have is okay. This is a diagonal support, and it's like a phantom trend line. So this is stop loss here. This is stop loss here. This is stop loss here. We should wanna still go into it. It doesn't have to do it 2025. It just might take this slow out. It might not even come as far as here. But the mindset is just not. This is not what I'm telling you. Me, I am looking at this as the sell side here, the sell side here, the sell side here. Okay, just to make it clear. So here is the weekly time frame. You can see this fair value gap, like the one I showed you on the 4-hour time frame on, I think, the European dollar. This inversion fair value gap, it was overlapped to the downside, came up again, came down again. This is showing you a high resistance liquidity run. How many fair value gap did you see here? I give you 5 seconds from here to this. Tell me how many fair value gaps you can see on this time frame. Well, I don't know if you saw any, but I can see just one, which is here. The difference between this candle's low and this candle's high. Let me show you clearly. I'm like, oh, I didn't see that. Yeah, there are levels to this. Look at that. The difference between this candle's low and this candle's high. There's a fair value gap here. Can you see that? I hope you do. I really should, because I made it obvious. So that's the only fair value gap. The point I'm trying to bring is that, like, look at all this back and forth, up, down, up. Like, price compared to all this, look, fall easy, rise easy. But look at this. This is just a range market. It's going horizontally. That's not good. That's high resistance. You don't want to trade so much. But the bias is bearish. Quickly look at this inefficiency here on the weekly time frame. Here, I'll tell you what that inefficiency means as I run quickly through the other time frame. It's a weekly CB. It's order flow key. Like, its concentration is a key level of decision. So that's telling you that the midpoint, if candle close above it, I've been looking at this long since November, and no candle has closed above the midpoint, even on a what weekly basis. Look at this. This is 1 week. 1 week. You see that? So it's bearish from the weekly basis, and this candle closed below it. And what happened? It uses it as a retracement. Rewind the video to where I told you on European dollar, where I did something like this. Now you understand what I'm trying to tell you in European dollar if you can get this. And I told you that, okay, since this has overlapped and we're here in the European dollar, so you are looking for something like what? A candle should come down after taking out that high on the European dollar, which is that buy side relatively equal highs. Check it. Just one video, and I tell you can look for a return, right? A return into it towards taking all selling opportunities. This kind of return is what you're looking for to go down. It's usually a very, very good kind of entry. So this kind of return here, this very one, is what you're looking for. I won't go back in here. Just tap a little bit, few seconds, and you'll see when I'm drawing the pattern on the European dollar. So this is what I'm expecting to see on the European dollar based on that time frame. Is it 4 time frame? I can't really remember. But here we're bearish, and I will note there'll be very key levels, probably 2. This tail consequent encryption here, there's the midpoint of this candle still here. You see that? That's here. We want to see if body will be able to close below that. And also this week's here, this week 2nd December, that candle week, the upper part is the week, the lower point is the tail. The week, the midpoint, I made it very blur, but let me make it obvious since I'm talking about it now. So you can see that black line at 1.27765. That's the consequent encroachment. You can see that. You don't want to see body close above that, and we have been failing. Now, what's the next one you're looking for? You split this candle. That's what you've been doing. You've been walking forward. We use this candle before this candle form. I told you this week will be a draw on liquidity. Did I do the analysis here? I think I did. And enter. So the same thing, you will repeat it this week. You will take this from this high to the opening price for a down close candle. You extend right. It's like this in network, I'm not seeing it. But that way you just split the candle into two. The midpoint of this one should be about this level, 1.265, you know, let's just say 1.26580. I'm just giving an approximate value. That level, you want to see if price want to retrace there. So to the daily time frame, note all these weeks I just talked about, so it might be used as amplification for the daily time frame explanation. Here we're on the daily time frame. This is that midpoint of that week on a weekly time frame. Like, you don't want to even see price come to that level. And notice here there's no fair value gap from here. No fair value gap. Do you see any? I can't find. On a daily time frame. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. No fair value gap. High resistance liquidity. Imagine you're trading in this, bro. Like, you don't want to do this. When I go to lower time frame, you see it's so messy. This is what I call dirty price action. It's high resistance liquidity, right? Well, what you want to see now is this is a level here. This is the day time frame. This candle's wick. The midpoint is this one you're looking at here. Okay, let me take this fib. Let it be visible on the 4-hour time frame and subtracting the daily. Yeah, this one you're looking at 1.26. What? 1.267. 1.26207. That's what. That's the main last line of defense. A daily week cross equipment. Higher time frame body should not close. It should be above. Should be above, not below. So that's a typography of error. Above. And higher time frame, I just put HTF. So if you haven't seen HTF, it means higher time frame. So higher time frame bodies should not close above here for high probability. HP here is high probability, not the laptop, you know, high probability sell side delivery. So that 1.26207, I don't want to see body closing above it. And before that is this candle. Like, if you split this candle to 4, this level is almost the level, the quadrant, which is that lower 4. You know, if you split a inefficiency into 4, you have the lower quadrant, the midpoint, the upper quadrant, then the full 100%. So the lower quadrant is at 1.26020. So this level is 1.26019. Just one pip different, okay? Less than one pip, really, one pipette. So, and it's also 50% of previous week's range, and it's also the daily week lower quadrant level. So that level is very important. So if you can see body closing below this level, which is doing right now, that's telling that we are bearish. Even though we've not been expanding lower, we are still bearish. For body not to be able to close above this place, let alone this week. Body even couldn't reach this week here. I'm talking about this one, the cost code improvement. So it has just been kept below here. Drawn liquidity is low here. The sell side liquidity below this low. So the 4-hour time frame, then we'll round up the video. And we're on the 4-hour time frame, and I told you sell side liquidity is this low here at 1.24752. Sell side liquidity is there. That's the drawn liquidity. Now, how do you want to see? Like, I showed like a kind of a pattern, not a pattern, like a kind of signature you want to see on the European dollar. You want to see something very similar. Remember, there was a high I outlined on the European dollar, and I told you that that high is more probable for the European dollar compared for the British pound. Is it more probable for the British? It's just more probable for one than the other. Once I read the 1 hour time frame, I'll tell you what that high is. Here is that weak cost improvement. This is that Fibonacci. It's really giving me a little bit of headache here. No, I don't want you to see it here. So let's just do it this way. So this is our week. I told you at 1.26207. You want to see body. If the wicks, like a candle can go in there and touch it, it's fine. But it should not close above it on a 4-hour time frame or on a daily time frame. Even if a 1-hour time frame close above it, you don't want to see a 4-hour time frame close above it. There's a reason for that. Notice, see the closing price of this candle. You know, when I say OHCL, open, high, low, and close. Okay? The closing price here is 1.2635. What? 1.26035. The opening price here is 1.20. Sorry. Of this candle is what? 1.26035. It's just about this level. 1.26. Just a little bit higher. Like, it's respecting this level is what it's telling you. So it's bearish. Even though this inefficiency was allowed to the upside, it's still bearish. It does not overcome this upwards candle here, which is a bearish order block. See an inefficiency. This is an inefficiency here, and it's respecting it. The main threshold of this order block is also above here. This down close candle has already invalidated this one. If this was the up close candle, this 1, 2, 3 would have been a consecutive up close candle. It would be an order block. For those who have been watching the E-mini S&P, I told you that I will talk about order block if the situation permits. So here in Forex, I have it. That's what I'm saying. Remember, if you're an index future trader, I'll be dropping the link for you in the description for this video so you can check it out and help yourself. So these highs also are very close proximity. We're going to the 1 hour time frame to look at it, and that'll be where I'll really round it up. The last thing I'll tell you is that high that are very similar between the European dollar and the British pound, of which one of the two will be the one that is the most probably of which one of the two, which is one of European dollar or British pound, we should likely be the one to be taken out first. And I'll tell you why it should be that. Now, here we have this inefficiency. The remaining portion of this inefficiency here is beyond the scope of this video. I don't want to talk so much on that. But this high here is a buy side liquidity right there. 1.26 what? 1.26141. That's what a buy side liquidity. Really, for high probability buy side, sell side delivery, price shouldn't really take this high out. Yes, it should. It can take this one out, but it should not come to this high. You can see it's above this green line, which was odd. 50% previous range and the lower quadrant, which is the 25% level of the Fibonacci in measurement of the candles wick. That's not too complicated, I hope. That's just what it means. And you can see from here, this low was not taken out. Did you see that? This low was not taken out. Why should it be so? Why? They are what? Engineering what? Sales liquidity. The support traders. Oh, strong support. 1, 2. Really strong. The stop loss is right here. We're coming for you. In as much all these parameters are in sync, we're coming. Plus the new week opening gap for 21st June 2024. You can see that new week opening gap. It should really is a very strong array. It should really send it's a very strong PD array. Now back to the European dollar. I said I'm going to tell you the high, which is going to be the most probable to be taken out between the British pound and the European dollar, and why the British pound or the European dollar should be the one to do it first. So my eye already goes straight to the high. It's about here, right? So it just loaded now. This high is 1.04476. Look at it. I said something about it. Too clean buy side liquidity, more likely to be swept than the British pound, which is the European dollar should really want to take this high out even before the British pound do that. Remember, this high is what? I'm putting the candle right at what? Look below here. Well, Friday, 14, that's 2 p.m. 2 p.m. Friday, December 20th. Now we'll go to a British pound, the same high. So this one is the most probable to take its own out, right? And I told you want to see a pattern. Remember, I told you in that video that there's a pattern you want to see. I showed you in the European dollar that you want to see something. If it takes out this high, you want to see this place here. You want to go in here. Repetition is for emphasis, okay? So if you're like, oh, I've said it, I know, okay? So, and something like this. This is what you want to see. And I showed you on daytime frame how that can be a very nice superior entry and it can really send price lower. Now the same high, remember 14 o'clock, which is 2 p.m. Let me just do something so it will be looking real and realistic. It will not be like, okay, I'm trying to demo or trying to just show you, fabricate something that is not real. No, I want to show you real time that this is the exact candle and this is why it should be. So I put it in here, 2 p.m. Friday 20th. We'll go to the British pound. Remember the cross ES is still there, so you see directly to show on the British pound at the same time, which is Friday 28th 2 p.m. Here what? Do you see that? Friday 20th 2 p.m. You see the high? It's even lower high, but look at this high. Look at the distance between this high and this high. It's a little bit farther, so this one is more prone to go down compared to the European dollar. It can switch this week, but throughout this week this gave more selling opportunities. And the European dollar was just ugly. It didn't give selling opportunities. It did once on Friday. It gave an opportunity, but more like throughout the week, this guy was doing more sell side opportunities. The European dollar was more wanting to go to the upside, like it wants to offer buy side delivery. That's why I said its own high, which it made its own high at 14, which is at 2 p.m. But this one high is actually showing here. This, so you can see it's even lower high here compared to that 14. Here, the relative strength analysis is beyond the scope of this video, but I can do it if you are dropping the link in this video. I did a video where I explain exactly how you can know, if let me just toss this in when I end the video. You might be trading, let's say you are a Forex trader, you're trading the European dollar, and you just peep at the British pound, and you were short, you saw the British pound went 3 times faster than the European dollar. Why did that happen? It's in that video. I'll drop the link in the description. Same thing applies to if you're an index future trader. You might be trading the E-mini S&P and you look at the Nasdaq, you went long, and Nasdaq went almost like 6 times. Yes, 6 times more than what you saw in the E-mini S&P. Like, what the hell? Why did I buy in Minnesota? Why did I buy the Nasdaq? Why did I short European dollar? Why did I sell short the British pound? How you can know which one should outperform the other one before it happened is in that video for relative trend analysis. That's why I won't go in depth here, because I've done it in that video. I took this time to explain it. The link will be in the description. Check it in there. I think it's relative strength. Yeah, it's there. I'll drop it for you if you want to gain more insight. So this high should be less prone to be taken out compared to the European dollar, and I told you why. The European dollar is more, it's not willing to go down as of last week. It might switch gears. They used to switch at times, but what I'm seeing, this guy want to go lower more than the European dollar, because the European dollar has done so much of sell side delivery on a macro basis throughout November, October going to November, even October going to November, where the British pound was not doing that. So the British pound want to act like a catch up. It wants to catch up with like a six sister, like a sick one. They want to catch up with what the stronger pair has done, which was the British pound was the weakest to the lower one. So this one want to catch up with that speed. So the European dollar is kind of slowing down, while this one is just moving low to catch up with what has been done. So that being said, this is how far we'll be going in here, and for this is very similar to what I told you here. You just want to see something go up. It doesn't necessarily need to go to this high, because you can see this in this area here. I told you the lower quadrant, but let's just say it comes in here. It's permissible if it takes that high out. You can just take a short term and still leave that high out. It leave that high, taking the rejection block. Even if it takes this high now, how far beyond this high? Let's just give a tolerance for that. Then let's don't be okay. We have to bend to it, just will not take it, and eventually okay. How high? Look at that new week opening gap. It should not go beyond that. That should be enough to send price, like to keep price at bay. Hey, enough, stay in here, wait. Yes, that's what I'm expecting. So once it does that, if it ever do, I don't want to see this really because it's just so far, but it can, but it shouldn't for high probability sell side delivery. They want to see it fall lower, might give you a chance, then even go lower to engage all our sell side anticipated delivery. It might not go straight lights unless it's a high impact news event. I haven't checked the news, and I think we might be having Friday should be New Year. We should be in New Year already, so there might be NFP release. So be very careful with your trading. Be very cautious. Apply proper risk management. Don't risk more than. Don't risk more than you can afford to lose. Be very. Somebody might say, risk 1%. If your comfort is risking 0.25%. Do it. Don't follow the rule of 1%. Do what is comfortable with you, but don't be saying, oh well, I'm comfortable losing 20% of my account. Well, what the hell is that? 5 losing trade, your account is gone. But just be in your comfort, like what you're comfortable doing, and that's how you can forge discipline. Do what you're comfortable doing over and over, following the rules. So hopefully this touch every edge. If you've not subscribed, you can just do that and give a like, give a thumbs up to the video, share the video to your colleagues. You have someone who is into Forex, and this information will help this guy. This information will help this gal, and or probably your mate, whoever your friend, family, whoever, elderly. Just share to your colleagues. I'm giving you for free. This people like, okay, pay me money, I'll tell you this. No, I'm doing it for free for the community. Enjoy it for free. I can do this, and I can do it by I've been doing it by the help of God. I've been doing well in it, and even with a time with a 90% accuracy. And I'm not just I'm saying no. Check the playlist. I'll be adding this video to the playlist, weekly commentary and analysis. That playlist on this channel, I have analysis of, it should be up to 10 now, if not 15. Look at the accuracy. Almost 100% strike rate. Probably only one was wrong there among 15 or so. That's crazy. So when I say 90% accuracy, I know what I'm saying. I can tell you where price is going to from a weekly basis to a monthly basis, and extending even possibly to a quarterly basis. Price moves in segment. It might switch bias and go another trend after 4 months. So I can do this is my strength, okay, and I'm willing to share it for free. Yeah, just to add real quick, and price might go beyond this 1.24752 sales. It should want to extend to 1.24461, just for reference purposes. It might want to extend to that level. It's very important you have that in mind also, so you will not just limit yourself to that myopic view. Not myopic, that's very reasonable, but you want to have one of the linearest portion. If you're a swing trader, you want to have something like that on the table. And I was thinking of doing crypto, probably Solana, Cardano, or I don't want to do BTC, but really I don't know if I have any subscriber that's a crypto guy. If you're there, you can just comment, I'll do crypto, I might consider that. But since I don't have anybody demanding crypto, I just would stay at bay. I'll just be in Forex and Indices for now. So that'll be it. So hopefully you find this video impactful. and be safe. Have a great trading week ahead. Thank you all.